There have been some big bank predictions out there in the past. Standard Chartered has been one of those that has led the way. Let's just jump right into it today because we've got a special guest for you guys. Before we get going, I do want to thank our sponsor, and that, of course, is iTrust Capital. You guys can jump into your own crypto IRA. Very easy to do. All you have to do is jump over to itrustcapital.com. Using our link, it's going to give you a little bit of a kind of a reward. You get a $100 funding reward once you start one, and you can get into gold, silver, including crypto, all sorts of assets out there to get into your own crypto IRA. So check it out. You guys will love it. Let's get over to Geoff Kendrick, who is the Global Head of Digital Asset Research at Standard Chartered. I wanted to bring him in special today for the market update. How are you?
I'm very well, Paul. How's things over there?
Excellent, excellent. So a lot happening in the market in general, especially when you look at what's going on with Bitcoin. I want to kind of lead off with that, Geoff, because this was something that just happened not too long ago, back in April. Standard Chartered predicting a 500K Bitcoin and a $40,000 Ethereum. Now, when you look at those two numbers, why does ETH outperform Bitcoin? What would be your analysis there?
The main thesis is that we're finally now at a stage where, quite frankly, digital asset technology or blockchain technology is actually going to do something for the rest of the world. Yeah, so think about other technology changes we've seen in the past. Uber taking over from traditional taxis being one that people often cite. And the point now is that up until really 2025, when everyone probably has now heard about stablecoins, it's probably fair to say that most of what was happening in crypto land was crypto people trading with each other. Yeah, but with the onset of stablecoins going mainstream last year, Genius Act in the US, Circle's IPO, etc., all of those, let's say, technological outcomes that blockchain enables, which is 24/7 instantaneous payments, essentially for free, moving money globally 24/7, right? So internet speed money, which is what stablecoins are. And then the next thing being tokenize everything else, stocks, bonds, mutual funds, etc. Right? So that's all getting started, and pretty much all of that will get done on the Ethereum network. So think about where others have gone in the past. BlackRock's Biddle Fund, which is a money market fund on chain, at the start 100% on Ethereum. Over time, they diversify to a few other blockchains as well. But most of that stuff that TradFi is going to tokenize, cash and other things like equities, will most likely be done on Ethereum in the first few years. And so it's very likely that you get a dramatic increase in the amount of activity, transaction volumes, etc. And that should, albeit that the pass-through to token price is somewhat indirect in the case of Ethereum, but that should see the token price head higher as well, medium term.
Would you consider the 4-year cycle pretty much done, or do you feel like this is still a potential here? Because I noticed you guys had a little bit slower pace in terms of growth for Bitcoin's price in terms of a forecast. Wouldn't that change the thesis on the 4-year cycle?
I think over time it's fair to say the 4-year cycle is becoming much less important. Yeah, so in previous cycles we didn't have the ETFs in the US, and so because of flows like ETFs and even quite frankly the digital asset treasury companies like MicroStrategy, that kind of takes the top off cycle highs and should also take the bottom off cycle lows. So when even the October 6, 126K high from last year, it wasn't really a big blow off top, right? And so because of that, I'd expect the downturn this time to be much shallower. We've done about 53% so far, the 126 to just below 60K. Not a very dramatic downturn compared to previous cycles. And I'd say perhaps we've seen the low or otherwise very, very close to the low. A number of people talking about Bitcoin basing in Q4 this year, which would be consistent with previous four-year cycles. I suspect actually the market will preempt that now. So if everyone's focused on the first week of October being 12 months after last year's high, probably markets will preempt it. So I'm looking forward to us getting through the IPO summer. Obviously, we've had SpaceX. We'll see OpenAI, who's most likely September. That's been taking cash and eyeballs away from crypto. I think if we can get through that, it'll be great. If we get Clarity Act, that'd be a huge positive. If we don't get it, I think you'll start to see SEC and CFTC give guidelines anyway, and then you can start preempting that otherwise October low that people have been focused on. So I'm relatively confident that we've seen the low, either 100% seen it or very, very close. I can't see us going dramatically into the mid or even low 50K range at any stage of this cycle.
All right, so that was my question. My next question is, because you guys called the 59K, and that looks like it could be likely the cycle low, but you think that most likely is the case? You don't feel much more into lower than 59?
We've either seen it already, we've had a couple of 58s and 59s, or it's going to perhaps dip, but not much below that. The big driver recently has been what Michael Saylor has been doing with Strategy Inc. And it seems now, after the sale from last week, which was more than 3,000 Bitcoin, actually the market's taken it pretty well. Bitcoin's up again today. STRC, the credit product, which is a preferred stock for MicroStrategy, has also been trading a lot better over the last week or so since they put out that announcement last Monday around backing up the cash reserve. So that had been hurting Bitcoin around the lows. But if that potential negative story could go away as well, which it seems even today after that 3,000 Bitcoin sale, the market's taking it pretty well, that would give me even greater confidence that we've already seen the cycle low.
Okay, so now that you're talking about Saylor for a second, before we get into your top call, because I want to kind of talk about that as well, but Saylor selling essentially $250 million here to handle one dividend payment. I'm assuming that's one dividend. Maybe he's got a couple in there, but now we're getting into multiple payments per month that's happening. And if we don't see something till late summer, wouldn't that mean that Saylor has to continue to sell Bitcoin throughout the summer?
I'm not sure that's the conclusion we need to draw. So Strategy already have $2.5 billion of cash sitting on the sidelines, and that's more than 2 years of coupon payments or dividend payments. Yeah, so they have plenty of cash on hand. The trick here is for Saylor to convince the market that they now have a different strategy for the Bitcoin. So in the first few years when the MNAV was above 1, the strategy was obvious. Hit the ATM, buy as many Bitcoin as you can, and just be a Bitcoin accumulation vehicle. But now Saylor's trying to pivot more towards a credit vehicle. Yeah? So STRC has about $10 billion outstanding, and he's trying to tell the market that actually that $10 billion outstanding in the preferred space has a massive backing, $52 billion of Bitcoin that MSTR still holds. And so he's trying to convince the market that if needed, he can sell some of those Bitcoin, whereas up until recently, he was saying never sell your Bitcoin. And so that 180-degree turnaround is a little bit difficult to get across from a communication perspective. But I suspect if the market trades well through the rest of this week after that 3,000 BTC sale from last week that they announced just a couple of hours ago, then perhaps we're starting to get into that credible communication channel where, quite frankly, it probably means if you convince the market that you can sell your 4% of Bitcoin outstanding that you hold, massive number, then you probably don't need to sell them. Yeah, so it's a credibility type game that we often see central bankers play.
Okay, all right.
For example, as well.
This was a market test, I guess.
100%. Strategy wants to pivot from being a BTC accumulation vehicle to a credit vehicle, and it's very clear that is what Michael Saylor is trying to achieve. Then convincing the market of this pivot, if you like, is very difficult from a communication angle, since you have all the same people in seat, and you had 5 or 6 years of Saylor saying never sell your BTC.
Right.
So now he has to say, well, I've got a huge stockpile. I'll sell them if I need to. I don't want to, but if I need to, I can use those to back up the credit or the preferred stock.
Speaking of pressure on Bitcoin, you guys right there at Standard Chartered called for the high there at 120, off by just a smidge. And at the same time, it seems like you apologized for, maybe it's too low, but in reality, you actually called the top, at least the top that we know of right now on Bitcoin. My official target for the end of this year is 100K, which feels about right. I think we've either seen the low, we might chop around for a couple of months, and then Q4 I'd say will be quite a big quarter, and that'll see us up to 100K, fresh all-time high next year. Relatively comfortable with that. I've got a 200K by the end of 2027.
And also through that period, we'll get all those other use cases that are starting to feed into Ethereum and other like the protocols, etc. So where let's say the medium-term trajectory for the asset class is very solid. So if anything, I'm even more bullish medium-term on the back of all that.
Very good. Correlating to Ethereum, I want to jump over to Uniswap for a second. Uniswap jumps double digits. Standard Chartered obviously eyeing this number, which surprised me even. I'm a big Uniswap follower, and I feel like this is one of those protocols that has a great opportunity to kind of explode here. You compared Uniswap to YouTube. Unpack that for me. Explain that. Yeah.
So in the research note, I'm as YouTube to Coinbase as Netflix. So what I mean there is essentially everything that happens on the Coinbase exchange, and I'm sure a lot of your viewers have used the Coinbase exchange. It's a great exchange, but everything that happens there is determined by the Coinbase entity, right? So they say we would like to list various tokens, etc., depending on liquidity and other. But essentially, let's say the corporate entity determines all of that. For Uniswap, it's essentially the exact opposite. You'll have users add liquidity, be it tokens, and they'll add those into new liquidity pools or indeed existing liquidity pools. And so over time, you get, let's say, a crowd or bottom-up demand-driven version of an exchange in exactly the same way as with YouTube. It's really that bottom-up growth which drives, in terms of individual contributors. And in addition to that, you also see a lot of the value in the YouTube example versus the Netflix example pass through to the content creators. And you see something similar in the Uniswap versus Coinbase example, i.e. the liquidity providers who add tokens to those pools also get quite a lot of the fees passed through to them. So I think there are quite a few analogies between the two. Now, the point for me here on Uniswap, and that where we got to that $100 target, is everything that's getting tokenized in the real world. And so today we've got roughly $300 or $310 billion of stablecoins outstanding. I forecast that goes to $2 trillion by the end of 2028. US Treasury used that number. That's where they got that from 12 months or so ago. Tokenize everything else, which today is tiny, about $30 billion only. I think that also goes to $2 trillion by the end of 2028. So you've got this massive train, if you like, of cash primarily coming out of TradFi, where banks and others like BlackRock and others are tokenizing things at the moment. And you fast forward 2 or 3 years and you'll have a massive uplift in the amount of assets on-chain. Secondarily, in my opinion, you'll get a massive uplift in the percentage of those assets that get plugged into DeFi. So of the stable coins and tokenized real-world assets today, only 3.5% of those make that all the way into DeFi. Most of them just sit on-chain and, quite frankly, don't do that much. So if you see a huge uplift in assets on-chain and percentage in DeFi, which is what I think you'll see, and protocols like Uniswap have a very linear pass-through from more activity to more revenue and therefore higher token price. And it's a very linear and easy to scale operation, Uniswap. And so that's really the number I'm getting there to $100 is just that pass-through. So it's just a massive amount of new assets on-chain being used in DeFi protocols like Uniswap. We saw the Robinhood news from Uniswap the other day as well. And so I suspect we'll see more of those partnerships, and essentially money is coming out of traditional financial markets at the moment from fintechs, but going forward, probably banks and more traditional real money or pension funds accounts as well will be teaming up with Uniswap in order to get into that DeFi liquidity pool space. And it's a very, very, very simple pass-through from activity to higher token price and hence 100 by 2030.
Yeah, I'm looking here at the report you guys put out, Standard Chartered report. This is the Global Research Report on June 15th. I'll zoom in on this for you guys right there because you can see the forecast right there is Uniswap right now sitting in 2026, 650, 27. That looks like about a 3x or plus, 28 up to doubling from there, and then all the way into $100 there. So very intriguing, ascent in terms of, I guess, to correlate with what you're talking about in terms of the growth of DeFi and the alternative market that seems to be building right now. So, which we believe that is kind of going to be the case, really. If you look at just the data, cumulative uni right now, this is the burn. If this doubles in terms, I mean, essentially this puts Uniswap into a point where they're going to be doing a burn rate that's going to beat inflation on this. So that in itself would be pretty significant. When would that occur, do you think?
So it depends on how quickly the token price moves up. You can either see one of two things. Either the token price goes sideways at $3 or where thereabouts we are today, and because of that, you would rapidly go into deflationary territory.
Yeah.
Like in 6 months from now, you'd be deflationary. And actually, you'd end up burning like 30% of the tokens in a 12-month period if we stayed at $3. So that's clearly not going to happen. Or the token price goes up and the deflation is less dramatic. Yeah, so you're getting a massive increase in dollar-based throughput, and the uni token price will adjust to be, let's say, marginally deflationary rather than what would otherwise be roughly a third of tokens in 12 months, which clearly is not something that the market would go for. More likely, the token price goes up and adjusts for that, and hence those price targets.
Do you think that institutional, like a BlackRock, is actually buying into Uniswap?
So BlackRock and Uniswap had an announcement, I'm going to say 4 or 5 months ago now, where BlackRock is plugging into Uniswap X, which for those that don't know is, let's call it the institutional style version that you have on Uniswap. So that the BlackRock team up has already happened. And they also bought tokens at the same time. So that large name has already entered. You've had Robinhood. You're certainly going to get others in the next little while. I suspect actually where this goes and becomes very interesting is when equities become tokenized, you'll end up with liquidity pools that look like the following. So something like oil versus oil stocks in a liquidity pool. Mm-hmm. And in banks, in TradFi, we just can't do that because we always go back to dollars. We always hedge out, right? Whereas liquidity pools have that advantage. And so you can run at massively lower cost of capital in those liquidity pools. And in those types of examples, there'll be hundreds, if not thousands, of those crosses that you can logically think up when you think, everything in stocks and commodities and other becomes tokenized in the next couple of years. So there's that. That's where the huge upswing comes from. And the cash will come in from the BlackRocks of the world or the Standard Charters of the world at some stage as well, I'm sure.
Do you think Uniswap is kind of a future winner here in terms of the equity versus token debate that's happening? This was a tweet that was out there. I saw Eric Voorhees talk about this. Tokens with equity do not work. This is the debate. Even though, I think the argument there is maybe not on point, but the point is that Uniswap is essentially an equity token. If you're a holder, you're getting essentially paid to hold. So do you think this kind of settles that over time, or what are your thoughts?
It's a very unique use of digital asset technology, right? Mm-hmm. So you have a few protocols now, like Uniswap, that turned on the fee switch last December. Yep. You've had Aave, you've had the fee switch on for a number of years now as well. So it's a relatively unique way to pass through economic value to token holders. i.e., you get in revenue, you have some profit, if you like, in a traditional non-crypto sense, and then you pass that through, in this case, by burning tokens. So rather than off-chain corporates either giving dividends or equivalent, in this way you're essentially passing through value in the same essentially the same fashion, right? But you're doing it in a digital asset sense, and I suspect that's where the model needs to go over time. So others haven't quite gone there. So the likes of, let's say, Morpho, for example, that today don't have a fee switch turned on. They feel to me more like early stage.
What if they did?
Well, at some stage, I suspect they will turn it on. But right now, the fact they don't, I think, is fine. Mm-hmm. So they feel to me more like early stage tech. So those with some grey hairs probably remember Jeff Bezos back in the day saying, well, I'm not paying dividends because what I'm investing in, Amazon, is the best thing going around, right? And so early stage digital asset companies like Morpho are making exactly the same argument. And when they get larger or more established, they'll probably turn on their fee switch too. And it's already, in that case, inbuilt in the code. You just have to flick the switch.
Well, you look at some of the company projects that are actually doing this. I mean, even in the NFT world, you had Claynosaurz doing this announcement right here. They're distributing 15% ownership now to the holders. So equity season, in essence, may be launching now, and Uniswap has kind of led the way on this. So to your point, because that was my question on Morpho, if they ever turned a fee switch on, like, wouldn't that be kind of a must-have token, especially on the institutional side?
100%. So for your viewers, in the last 3 weeks, I've done 3 research notes on DeFi protocols. Uniswap, we've obviously deep dived. I did one on Aave, and I've done one on Morpho last few weeks. And within the DeFi space, they are my top 3 tokens. And the reason for that is that I think when TradFi money comes in here, so we're talking about BlackRock, we're talking about Standard Chartered, so banks and pension funds, essentially, when we tokenize stuff, we want to plug that into trusted names that have had some battle tests, right? So these protocols have been around a little while. They're getting good team ups with TradFi participants, and so they have relative size. Yeah, so they're not the very, very small, but they're not the large, super large protocols. But in that space, they've been around a long time. They know what they're doing. They're trusted names, and so I think they're actually the ones that win the TradFi money when TradFi enters this space, i.e. tokenization, at scale. Because if I turned around in Standard Chartered today and said, look, I'd like to team up with what we're doing with Uniswap, Aave or Morpho, quite frankly, a number of people may not have heard of the protocols if they're not in the weeds of crypto, but I could give back history on stuff that the founders have done in each of those 3 tokens, and it'll be very, very credible to do that. And so as a result, I think that's where the TradFi conservative money, if you like, makes its way into protocol space.
Well, it's interesting you picked those 3 because those are 3 that I know we have been covering for an extensive period of time in the same reasoning behind what you're looking at is the potential for growth here. We just had Rand on last week from Zama, and he hits on a very interesting point. This was their partnership, the whole idea around confidential vaults, also partnering with Morpho on Ethereum. So you've got another huge USDC vault that's going out there on it. So I think this only starts to build, and it's going to build quickly. I guess the real question is how fast. There's the Robinhood announcement right there, working with Athena, and of course we're going to probably see more growth there. How long do you think we'll really see major capital moving in? Do you think this is 2026 that we see this kind of movement, or is it maybe a year or 2?
I think the time is now when everyone is asking questions about how soon and how much do we want to put into this. So I can tell you from being sat inside a bank and talking to everyone else in the industry that's thinking about tokenizing, everyone is asking these questions today. So how long does it then take to kick in? I'd say somewhere between 3 to 12 months. We'll get large scale asset managers and banks plugging into DeFi protocols. So I expect it to come soon, and I expect the scale to be much more dramatic than people are prepared for, right? So far we've had relatively small ones. You've mentioned a couple with Morpho in the vaults, etc. I expect you to see 10 and 20x's of those announcements that we've had so far within the next 12 months, definitely, but perhaps with even within 3. Now, if we could get Clarity Act in the US, that would help, or if we could just get that out of the way and get some SEC and CFTC guidelines, again, I think that either outcome will create a lot more confidence, if you like, in TradFi participants to move forward at scale. I mean, I know we all look at Polymarket for odds and everything these days. I mean, Clarity to pass this year has been between 40 and 60% for most of this year. I haven't looked at it for a little while if it's fallen outside that range, but I guess I've been basing my predictions on Polymarket being somewhere close to the mark. If it does pass, we'll get a positive knee-jerk surprise to the top side, and if it doesn't, quite frankly, let's just move on and get SEC and CFTC to get the job done, which I think would actually be fine for me. So if we did see a dip if Clarity doesn't pass, I'd be buying the dip on the SEC and CFTC expectations then to kick in.
Back to Uni for a second. Would you prefer Uniswap over something like a BMNR? In terms of an ETH hedge right here, right now. Obviously, Ethereum or BMNR being able to earn, staking rewards and cash out there so it's essentially got an engine there that has a similarity to it. What would you say?
Yeah, for sure. I like Bitmine and I like Uniswap. I think they do different things. I think what Tom Lee's done at Bitmine has been unbelievable. They now have so much ETH that the cash coming in from staking yield means they can do lots of other things.
Sure.
So it's a very unique business model they have, but it's at a much larger scale. Bitmine is $10 billion market cap. Mm-hmm. Uni is about 2 billion market cap. If ETH goes up and tokenization kicks in, as I expect, both will outperform, quite frankly.
Okay.
And you would probably see the ETH price higher. You'd probably see the MNAV of Bitmine higher as well, I think, because there's clearly a positive correlation between MNAVs and token price. In the same way, you'll see that leverage point go through to Uni. So I think actually quite genuinely investors should consider either of them. Now, they often do have different investor bases. The issue with tokens is not everyone either knows how to or can get access to tokens. Certainly in institutional space, that's true. Not everyone can buy tokens if they're institutional style investors, but everyone can buy equities. And that was the original rationale of the digital asset treasury companies, right? And so hence that's the niche that the likes of Tom Lee's Bitmine fulfills for everyone.
Do you think we're in a phase right now where institutions are setting out Bitcoin because of what's happening in kind of this pseudo civil war around BIP 110? What do you think?
I think we saw some selling of the ETFs to raise cash for the SpaceX IPO.
Okay.
So I think that was definitely part of it. Like you can only ever sort of square the facts together afterwards, but the amount of money that went into SpaceX, and then also immediately thereafter, another $20 billion went into the debt issuance from SpaceX too. I'd say you might see something similar with OpenAI, but that's smaller in scale. So I think that's actually where you've seen a chunk of outflow is people raising cash to get into the hot topic of the day, which has been the IPOs. So I think once we get through those, and if you extract from that sort of shorter term drive, actually the ETFs have held up pretty well. Like we haven't fallen massively. We got to about, I'm going to say 800,000 Bitcoin inflow since the start of 24, and we pared back like 100K or 150,000 in Bitcoin terms. So it's not massive actually. To be honest with you, I expected there to be more capitulation at one point, but it tells me that actually the bulk of ETF holders are very long-term pension fund style, teachers fund style. And so if anything, I'd say once we see a bit of a turn in price, you'll see that buying come back.
There was another price target that you guys put out, and this was in reference to XRP, and you had slashed your 2026 XRP target from $8 down to $2.80. Obviously, we have a big XRP audience here on this channel. Why? Why go this route?
I like XRP, but I think a little bit of what happened in the first few months of this year was I suspect we're going to go into a phase of a couple of the big tokens winning, Bitcoin, Ethereum winning, and perhaps in my mind some of the smaller tokens like the protocols, Uniswap, Morpho, Aave winning as well. So I think we could have a period of just a bit of diversification there. I like XRP. I like the guys at Ripple. I think they've got a fabulous product. But really, where we came into the year, we were looking somewhat frothy, I guess, in XRP from a token perspective. And obviously, it was hurt, like everyone, in the first few months of the year.
Do you think XRP suffers from the equity token debate in general? Because obviously, it doesn't have that kind of benefit that we're seeing in some of these other projects that are significant. Now, granted, XRP is a completely different animal, but what if something like that were to change? Absolutely.
It's fair to say that the large off-chain companies like Ripple that have tokens like XRP, it's a more complex animal than the Uniswaps or the Aaves or the Morphos, right, which have been on-chain for essentially forever, and they just have like labs projects, if you like, on the side. Another one I could throw in there maybe is Chainlink. They have some fabulous product at Chainlink, but they have like quite a lot of off-chain stuff and on-chain stuff, so it gets a bit mixed in the middle. So I suspect in each of those examples, at some stage we want to have either a change in how the value is passed through to token holders, and or possibly even just more communication around how the value passes through would also be helpful. Something that the smaller Uniswaps and RBAs and Morphos have not really had to do. They've just had to turn on fee switches or not at various times.
Yeah.
So a little bit simpler business model, I guess, for those.
Yeah, for sure. Listen, MiCA has launched. It's now effective. So what was 3,100 crypto firms is now 244. So this is a big change in terms of the landscape. How much of a impact on the overall crypto landscape does MiCA have? I mean, we've seen Tether impacted here, Binance impacted here. What do you think?
MiCA has been massively important. I mean, firstly, it's just been massively important to have, quite frankly, have something in regulation space actually active, which is wonderful. I think it's fair to say that Genius Act took a chunk of what was in MiCA and, quite frankly, cut and paste and added some new stuff on the top. I suspect at some stage MiCA might get reopened as well, and perhaps take some of the lessons that have been learnt in the US, which I think would be great. Where I'd like us to get to would be to have regulations for stablecoins in both jurisdictions be the same, i.e. 100% reserve backing, etc. The narrow bank solution that the US has gone down with Genius Act. I think that would be the ultimate outcome, would be if regulation was the same in every country and jurisdiction. And I certainly know that a number of other countries are thinking about going down the same route as the US. And so I wouldn't be surprised if the EU with MiCA ended up going that route as well.
What countries do you think would be following in line with the United States that you think would have a major impact? Because you look at what's happening in Asia and the Pacific Rim, there's some key movement, whether it's Japan, Hong Kong. Where do you think a hot center is that would potentially contribute to the crypto market globally?
I can probably tell, quite honestly, by demand for my time personally. So I'm sat in the UK. I've been to the US 5 times in the last 9 months, I think, for trips. So that tells me US is the number one hot place, which I guess is no great surprise. I've been 4 times in Hong Kong, so that tells you who's second. Hong Kong has been massively pragmatic in the last 12 months or so. A lot happening there. Elsewhere in Asia, Singapore, probably demand has died off slightly. I can see it picking up in Japan and Korea in the next 6 to 12 months, which is great. Europe, if I'm honest, is always a little bit sleepy, albeit UK is becoming a little bit more pragmatic in recent times. So maybe we'll see something out of FCA in the next little while in Europe. And obviously the Middle East was hurt by what happened in Iran, but presumably will bounce back now in the second half, I'd think.
Geoff, Vitalik puts out an interesting tweet. He's talking about the lean Ethereum roadmap. And one of the things that he's talking about, of course, has been the idea around native privacy. And when you look at that, if the upgrade does take place, how much of an impact would that have on your, thesis on Ethereum as a whole?
I think it'd be massively positive. So, I mean, the only thing that stands in the way from an institutional perspective of large-scale capital going onto permissionless chains is this privacy question. So if that can happen natively on layer 1 ETH, which I think it will happen, the question is its timing, then all of these use cases will go onto Ethereum and also, quite frankly, into the protocols that are very, very Ethereum-based. So I have partly priced that in my forecast. I think it's fair to say. So at some stage, I think it does happen, and hopefully we can get the push from Ethereum Foundation will be fantastic. We just had the new EF spin-outs announced, so ETH Labs and Ethereum Institute.
Right.
I'm hoping that we get, let's say, some cleaner communication from those 2 new vehicles, I think would be helpful. So let's say having the core EF and Vitalik in this on the tools, creating those types of solutions, and then hopefully the new entities, ETH Labs and Ethereum Institute, telling us all on the outside exactly what the plan is, I think is where this will hopefully go. And I would also note that those 2 new entities, ETH Labs and Ethereum Institute, their 3 backers are the 3 adults in the room: BitMine, SharpLink, and Joe Lubin, right? Which I think is the main takeaway that I had when they were announced recently.
Listen, we've talked about the underrated tokens, which is Uniswap, Morpho, Aave. Let's talk about the overrated tokens in crypto. Is there any that you would kind of say, hey, these are overrated right now versus what we're seeing in the market?
It's very difficult to say overrated, but I guess what we could say, I mean, quite generally down here as an asset class, I would say the whole asset class is still relatively underrated. But
underrated.
There have been some tokens that have obviously taken a lot of the hype, pardon the pun, in the last 6 to 12 months, right? So I guess where I'm saying there is I'm not chasing Hyperliquid. I think they've got a fabulous product, fabulous team, but most viewers already know that story, right? So I'm looking for those, let's say, lesser known stories today, hence the Uniswap, Aave, Morpho, and perhaps at some stage ETH layer 1 trading a lot better as well, I think would be fantastic. Okay. But some of those other stories like Hyperliquid, even the AI digital asset crossover types probably have been more known or more followed, if you like, for the last 6 to 12 months.
All right, Geoff Kendrick, Global Head of Digital Assets over at Standard Chartered. Thanks for coming in today. We appreciate it.
It's a great pleasure. Happy to be here.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.